screen share going, although, oh, there we go. All right, you guys should see a big blue PowerPoint slide in front of you. It looks like we are all set. Great to see everybody. You know, I love looking at the attendance, and I see a lot of familiar names, a couple new ones too. So it is great to see you all. Thanks as always for making time out in your day. Yes, let's go. I'm with you. I'm with you. Okay, so we have a lot we're going to cover. I absolutely encourage you all to take active notes. Take notes. We're going to go through a lot of tips and tactics that I've been using throughout 2021. We will take questions. We will leave some time at the end of the presentation to take questions. I think most of them will be covered. So give me some time to get through the presentation with you and present this. And without further ado, yeah, let's do it. Let's do it. Great to see everybody. I still see we have some folks logging in here. Very cool. All right. Without further ado. So welcome to day trading in 2021. Yes, we are halfway through the year. We're going to talk about understanding the first 2 hours of the day. This is the power band. This is the time you want to focus on. This is where the magic happens. I'm super excited to share with you what you can do in 120 minutes, the first day, the first part of the day, about 3 to 4 days a week. All right. So let's move into it. And the first most obvious thing is 2020 is behind us. It is in the rear view mirror. Absolutely. This is a different year, and the markets are absolutely presenting us with different challenges. Some we saw today. We'll actually get to today's action a little bit later on in the presentation. You guys will really like that. So definitely stay tuned for that. But this is a brand new year. We are adjusting to a brand new psychology. So with that being said, there are some aspects, and I think a lot of you will agree, that seem to be worrying a lot of traders out there. So tell me if some of this sounds pretty familiar. Not making the same returns this year as you did last. Yeah, maybe some heads nodding there. This market seems so different than yet last year. Yeah, maybe feels that way too. I keep hearing about a major potential sell-off. Was today one of them? Like I said, we'll talk about that a little bit later on. What do I do with this volatility, right? Lots of confusion there. I keep getting out too soon. I'm getting in too late. I don't know where to get out of the trade. I just feel the nodding there on the other end of this mic. What just happened? Again, probably a lot of you are feeling that around 2 p.m., yes? Getting sideswiped is frustrating. It's costly. It's discouraging. Yeah, whipsaw hell, exactly. But here's a cool thing. All this has a fix. And the fix that we're going to talk about is really not as complicated. It's some tweaks and some adjustment to your tools. This is what your P&L can, and quite frankly, should look like. Not straight up, not like a roller coaster, not giant single home run gains, steady climbs. All right. So the struggle is real. I think a lot of you are experiencing that. Early in the year, I had to make adjustments too. All right. And those are the adjustments we're going to talk about tonight. So the struggle is real, but I've got a fix, right? That is why we're here. So keep this in mind. Write this down if you don't mind. Simple word, scalability. All right. Scalability. So whether you're a day trader with a $5,000 account or a $5 million account, the bottom line is you need a solid trading plan and time-tested tools. And again, we're going to come back to this concept of 2 hours a day. First, 120 minutes in the day. And so as a plus, right, an added bonus, the things that we're going to talk about tonight apply not only to day trading futures, which I think a lot of you probably already know I do a lot of, but here's where it gets fun. This is also day trading stocks and ETF options. So you can apply this to not just the options on stocks and the options on ETFs, you can apply this to stocks as well. So regardless of the account size, the rules stay the same. All right, so for those of you that don't know me, for those who might be tuning in for the first time, watching one of these webinars with me, my name is Raghee Horner, and I'm the Managing Director of Simpler Futures and the Sector Secrets Mastery. I've been with Simpler Trading over 7 years. I think it's coming up on 8 or plus. And I spend each of my days teaching traders like yourselves how to succeed at trading, whether that be trading stocks, ETFs, futures, Forex. I've been doing a lot of that now for coming up on my 35th year. My 35th year. So, you know what that means, trading for 35 years? This is what I can tell you for sure. Almost 35 years now. I've just made a lot more mistakes. I've just made a lot more mistakes and learned from them. And that's what I want to share with you. So some of you may not know this story. We kind of, a lot of you might know it's my mother early on that got me sort of grudgingly into the markets via investing. But a lot of you don't know sort of the story about how I got trading. And this is my campus. This is actually the library at Florida Atlantic University. I stayed local. Yep, I got it to surf and do my homework at the beach. But when I wasn't doing that, I was in the library, this very library, probably right about here. And I was studying books, the only books I can get my hands on, old copies of technical analysis of stocks and commodities, the Task magazine, and old books written by Dow, Schabacher. That's all they had. And I would study in the library and I would be trading in my dorm room. And the funny thing is, my very first year of trading, my very first year of college, I should say, when I was really actively trading, my GPA was a 0.69. It wasn't even a whole number because I was spending so much time studying the markets and charting in my dorm room and making phone calls to my dorm room. I wasn't attending class. And the other reason I wasn't attending class is somewhere around 4, 5, 6 months in, I realized that I was probably making more from my dorm than some of my professors. So this is where my college wheels fell off the wagon, but my trading wheels really started to gain traction. And yes, I ended up graduating college. I majored in English and psychology. So, onward and upward, made mom happy, moved on. So that was sort of my, when I really started getting committed to realizing that I could be a trader. So trader, author, teacher, all those years later, in an effort to teach other traders, I've authored 3 books, 3 of my own. And I was actually the technical editor of Currency Trading for Dummies, which was actually a really fun exercise. And I've traveled the world mostly so I could take my mom all over the place. I got to travel with my mom and my sister to Paris, London, Seoul. My mom went with me to Seoul to speak, Jamaica. So we've had a lot of fun. I've got to meet a lot of folks. And it's neat about traveling all over the world. You realize that the mistakes that traders make in one country are the exact type of mistakes they make in another. The learning curve of trading is global. It is global. Yeah, don't forget Austin, of course. Yeah, all over the US. Super, super lucky to do that. And I learn a lot by meeting you all, right? Because what happens is you realize that our mistakes are not that different and they're all very fixable. So some of you might remember what we have been talking about now, keeping things nimble in terms of day trading. And some of you might remember what I did back in 2020. Now, who cares about 2020? That's last year. But the neat thing is, some of you might have remembered, I 10x the day trading account. So same idea, right? This was futures. Fast forward to where we are today, I just kept on going, right? So what has 2021 been like? So I just kept on going. So we reset it. This is about 77,000 or 76, if I recall. It's been a while now. And where I am right now, this is actually, I know a lot of you, this is what we've made. Actually, we're at 268 right now. So I haven't uploaded the last 2 weeks, but hopefully you guys can see this. This is where it sits right now. I'm at 261, 185. And I haven't uploaded everything. So just onward and upward, picking up from where I left off last year. 2021 doesn't have to be the enemy, right? It does not have to be the boogeyman. It doesn't have to be the dark at the top of the stairs. So let's get to some charts. That is why we are here. All right. That is why we are here. So this is a chart of the NASDAQ. And what I'm going to show you here is where we got in, right in here. and where we got out. Okay. Now, this is an interesting psychology. Again, we talked about that scalable mindset, right? So if you notice, and I'm going to bring in the calculator from time to time because I know a lot of you aren't used to crunching these numbers necessarily, but you can see the P&L at the bottom of every one of these screens. But this was a trade where we bought right around 12,780, minor psychological level, by the way, and exited at 12,920, 12,920. So for those of you that are brand new to crunching numbers in futures, right? How does this work? Well, 12,920, 12,780, all right? That's 140 points at $20 a point per contract. That's $2,800. And the typical day trading margin requirement for futures is $500 margin requirement. All right, so just keep some of these numbers in mind. I'm an English major, but I think crunching numbers is a big part of what we do. So a couple things also to keep in mind as we talk about the opportunities. This was an exhaustive trade. So again, some new lingo that maybe some of you aren't used to. This is not a momentum trade. We're taking advantage of lows that we can buy into while the market is broadly panicking. All right, so keep some of these ideas in mind. We'll come back to them. So the tactics for day trading success, number one, right under scalability. Hopefully you wrote that down. Maybe you wrote down my 0.69 GPA so you can make fun of me later on about that. Pick a side, right? Become a one-sided trader and focus on trading with directional bias. What is the bonus to picking a side? In other words, you're going to be only a long or short trader in the market. You're not going to flip both ways. This will prevent you from overtrading. If there's an error that traders make again and again, they overtrade and that costs you money. Makes your broker tons of money, but it costs you money. Now, how do we keep from overtrading? What allows me to have confidence to be a buyer only or a seller only? This is where a lot of day traders miss a huge component of trading. Write this down. Daily time frame. You need to know what the daily time frame is telling you about the likely direction of the market. There are actually 6 things in total that I'll look at on a daily time frame before I even look at the intraday charts at 9:30. One of the most important is what is the structure of the market by way of my grab candles, the green, red, and blue candles that I look at. We'll come back to this topic again, but your daily time frame analysis is going to help you pick a side. It's not the intraday, and that's where a lot of traders miss the boat and make really bad decisions because they think that their day trading decisions solely exist on that 1 or 2 or 5 minute chart. Okay, so trading success tactic number 2. Not all hours in the market are created equal. Really important. We've talked a lot about the first 120 minutes of the day. This is huge. Okay. If you think that 8 a.m. is the same as 8 p.m. or that 9:30 is the same as 1:30, you're already getting into very tricky territory because you've got to know the best hours to avoid giving back your profits or worse, trading into a negative for the session. Let's take a look at this chart. I've highlighted some things. Let me show you. So yes, another nice exhaustive buy. That was where I took profit. You can see the P&L at the bottom. Why do I have this in bright red? Well, in many ways to sort of draw attention to the fact that after 1:30 p.m. Eastern, look at what happened to the market. So if I thought the market was going to continue to behave in this climbing higher way into the second half of the day, look at what happened. Sadly, probably gave back all your profit and maybe then some. Heck, you might have been trying to buy the lows without remembering that you want to focus on the first 120 minutes of the day. And frankly, I don't want to at all be disturbed and distracted by the second half of the day. I am not actively entering trades the second half of the day. And you're going to find out again and again and again, if you focus on the first 2 hours of the day, right? If you focus on the first 2 hours of the day, you're going to find a higher degree of high probabilistic trades and success. And you won't exhaust yourself by trading 9:30 to 4. That is not going to get you to where you want to be as a trader. All right. Tactics for day trading success. Number 3, using the clearing range effectively. What is the bonus? Big word here. Day traders need to be patient. Okay. Patience is your friend and will help you avoid making these costly mistakes. Now, some of you might wonder, Ron, I don't know what a clearing range is. This is new terminology to me. All right, so let's take the techno babble out of it. The clearing range is the first 30 minutes of the day. That's it, 9:30 to 10 a.m. Eastern. The clearing range is the first 30 minutes of the day. It's the high to low that's created between 9:30 and 10. Really simple, right? In fact, if you're brand new to day trading, avoid the clearing range. Avoid it, meaning don't trade between 9:30 and 10. You can wait till after 10. Case in point, let's take a look at how patience paid. Quite literally, how patience paid. The bell rang here. See that? And we have this high to low. Here's your high. Here's your low that's put in. I'm not doing anything in this first 30 minutes. After 10 o'clock, you'll see here, we broke the upper end of the range and this green line plots. That tells me we've escaped. Price action has escaped that range. That also tells me and confirms that I want to be a buyer. Remember good old directional bias and pick a side? All right. So what do? We bought, exhaustive buy, and this was the initial target. So I'm just taking you to the initial target with some of these trades. Yes, in many instances, the market continues to move. And because of the way in which I scale in and scale out, you could take advantage of much more price action. But you'll notice here, the initial trade was in at 39.06 and out at 39.20. That is 14 points at $50 a point. 14 points at $50 a point, again, for that same $500 margin. So don't worry that the bell has rung and you don't have a trade in the first 5, 10, or even 30 minutes. You're going to want to be patient. Patient will definitely pay off. And again, look at the time of day this was. It was almost 11 o'clock before my first trade even fired off. Don't worry about having to put a trade off right away. Now, some of you might be wondering, Rob, does this mean that you're getting in and getting out in those 120 minutes? Let me go back here. No, not at all. So the first 120 minutes, 9:30 to 11:30, is simply when I'm making all of my major trading decisions and when I'm making my entries. Okay, trading decisions and entries. And I'll show you the tools that I use in the very next slide. We'll start talking about the tools that help me make decisions like buying here and exiting here on my first target. After 11:30, if I've got a winner on my hands, as I did here, I don't have to close my trades out. I can simply scale out and continue to ride the trend. I'm not going to re-enter after 11:30, but again, did I see another entry as good as this one after? No way. This was the greatest entry in the morning, and I'm just going to continue to ride that one as the trend is in my favor. All right, so the first 120, when we make our decisions, when we make our entries, and then we let the rest of the day just however it's going to happen, we can just follow that trend if it actually appears. And if it doesn't, we actually have, again, different plans in place to take advantage of, say, an afternoon rollover. Okay. All right. So how do we measure these things? How do we know that the market's rolling over? How do we know that we could continue to trend? All these things that, allow us to take advantage of a day that's trending versus a day that might roll over in the afternoon. How do we know? Okay. So that takes us to the volume weighted average price, the VWAP. If you need to know how to pronounce this, it's V and then WAP, like your apps on your phones, right? So there you go. Now you know, like you know what you sound like. You know what a VWAP is. Okay, VWAP, volume weighted average price. What is the bonus to the VWAP? This is huge. You'll understand why price action is mostly bullish or bearish. You'll understand why or when there's a tendency for follow through to the upside or to the downside. It's a really important line in the sand. Here's an example. This is the NASDAQ futures. And take a look here. This is a kind of neat chart. Right when the bell rang, we already saw that price action was sort of flirting with the volume weighted average price, the VWAP, right? And then shortly after 10, remember, we're being patient. Shortly after 10, price action said, yep, we're going to stay above that VWAP. Price action established itself above this key level, okay? I actually used three anchored VWAPs to time. So if you're wondering what kind of VWAP is this, it's an anchored VWAP. We anchor this to time. Really important. We do not use a rolling VWAP. We use an anchored VWAP. All right. That's a huge distinction there. And we got above it and stayed above it. In fact, not only do we get above that VWAP and stayed above it, we also, whenever we revisit that VWAP, especially when we have predominantly green grab candles, that's giving us a higher probability expectation of the market following through. In this case, bought the NASDAQ at 12,985, which was actually back in here, and sold it at 13,045. All right. And then, of course, the market can continue higher. And again, once you have the option to scale out, you can move to a break-even stop. And that's where really the fun begins. You've paid yourself and you've protected your profit. And look how the VWAP sort of guided like a nice gentle hand telling us, yeah, we're above the VWAP. Think of it as an equator, right? This would be the bullish hemisphere, if you will, and this would be the bearish. And those kinds of nuances can be very, very helpful. It'll keep you from shorting the market. It'll keep you from over trading. The VWAP, it's sort of it is the equator in many ways of our trading. So let's go on to the next set of tools for day trading success. Volume derived support and resistance. So the VWAP that I just showed you is a volume tool. Okay, it's a volume tool. And we're using the anchored VWAP. Listen to me now, believe me later. You're going to want to use an anchored VWAP in your trading, not the rolling VWAP, because we're looking to measure volume-based behavior from very specific times of day. Well, the same thing goes for a tool that I created back in 2008 called the V-score. So if you've never heard of a V-score before, that's okay. That's a name that I made up for a tool that studies the VWAP. It studies the VWAP, but it shows you standard deviations. So what does that mean? What's that technobabble mean? Imagine a bungee cord. When have you extended that bungee cord so far that it's likely to snap back to the up or down side? The V-score is measuring this movement of volume to show you when we're overextended. Okay, let me show you an example here. What this again is going to show you these exhaustion levels that other traders can't see. Why? Because they're focused on price only. A lot of traders are only looking at price, not at volume derived tools. And this is another edge you're going to have. So let's get back into the charts. This first bar here is where we bought. This is where I bought. This first bar right here. Where do we scale out? Just after 11:30. So again, I don't mind managing a trade past 11:30, but I won't enter again. And this is where I scaled out. And did what? Well, scaling out, think of it this way. You are paying yourself, right? We're going to scale out and pay ourselves. And this was the trade from 37.20 to 37.58. So 38 points at $50 a point. All right. You can see the P&L right down in there. But again, remember, what's really cool about day trading some of these futures is the cost, right? One of the things we'll talk about a little bit later is how can you keep your cost reasonable? Can you do that in other ways? Absolutely. We'll get into it. So the V-score here showed me the support right in here, and it showed me the resistance right in there. Okay. In other words, we are deviating far enough away that it showed where the market is likely to have a little bit of an exhaustion. And then remember, we already talked about the VWAP. What do the VWAPs say? We're in the bullish hemisphere. right? If you think you can continue to trail a stop, let's see how high is high. So look how these tools came together here. V-score getting me in, VWAP allowing me to see how much higher is high because price was trading above those anchored volume weighted average prices. V-score got me in, VWAP kept me bullish. All right, so next is the Dow. Taking a look at the Dow here. Once again, where we were looking long, well, let's take a look at the V-score right down here. Okay, where did I get out? Well, we're climbing higher, 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 and we actually exited right in here. Now, part of this exit was, look, I'm running out of time. I need to be flat by 4 p.m. I'm not entering new trades, but this was a trade where we're able to enter at 29,950, which is back in here, and we exited at 30,180. Now, for those of you that are not familiar with trading the Dow is $5 a point. So we get a lot of price movement in the Dow. The price movement range is pretty wild and wide sometimes, but it's $5 a point, okay? And that's what we did on the Dow. So again, V-score exhaustion getting me in, V-score exhaustion getting me out. And again, look, by about 11 o'clock, we were able to establish a better, you can see here, a better, clearer look of price action above those anchored VWAPs. So a lot of V. What does V stand for? Volume. Volume. All right. Another glow in the dark chart here. In. All right. Out. In. Out. Now, what do I want to remind you all of here? After 11:30, no new entries. You can manage what you have, but please, no new entries. Red means stop. In, out, 11:30. Are we established above the VWAP? So ask yourself, do I think that the markets are going to grind higher? Just some simple tools here. Are we going to grind higher? Are we clearly in the bullish or bearish hemisphere? No, we're just kind of chopping around. So no real clarity. Why would I persist to trade in that kind of environment? And then look at what happened in the afternoon session. Went right down because the morning session is not necessarily indicative of what's going to happen in the afternoon session. Keep that in mind. They might as well almost be two separate days. One of the things that hurts traders again and again and keeps them from having a productive P&L is basically over trading. Well, I showed you one way to prevent over trading. Pick a side, right? Talked about the daily time frames, place, and picking a side. The clearing range helps us pick a side. The VWAP helps us pick a side. That's going to reduce to a large degree your over trading. The second way you reduce over trading, which I'm telling you right now is the number one killer of accounts, right? It exhausts you and it's going to make you lose money. It's a lose-lose. Don't enter new trades after 11:30, okay? Those two tweaks alone in your trading are going to make a sea change in your results. I can tell you that with so much confidence. Like I said, doesn't matter if it was New York, Chicago, Seoul, or Jamaica, minimizing the amount of time that you are entering trades is going to make you a more effective trader. So the next thing we want to keep an eye on is signals. All right. So for a lot of you, I know you've been seeing some new charts new tools on my charts. V-score signals. So it doesn't get any simpler than this. Just look at the arrows. So one of the neat things about having these tools for so long now is that over time, we're finding ways to automate them. So what I'm going to run you through are the same three charts we just looked at, the same three charts before, but now with the V-score signal. All right, take a look here. Same exact charts. Might be a little tough to see. There's a tiny little green arrow right there. How did I know the V-score was telling me that we had an exhaustive buy setting up? A tiny little arrow right down in there. How did I know that we were looking at a potential zone to get out? These are exact same three charts. That red arrow right there. Okay. So I'm just following the arrows. Well, let's look at that same chart now again with the V-score signals. Just follow the arrows. So once again, you can see that very at the bottom. There's your green. And by the way, we got another one that yellow is saying, hey, the green is that nice conservative signal. The yellow is a little aggressive or aggro, as I like to say. So both those are telling us, look, whatever you do, please don't short into this weakness that we're seeing. We're actually sinking into some really good volume derived support. How many people look at volume derived tools? I'm telling you right now, gang, very few. They're focused on price-based tools. When did I get my first V-score signal saying we're exhausting and let's go ahead and pay ourselves? Right there. There's your exhaustion. There's your arrow. So that's what I'm following. So yes, the V-score is many of you are probably familiar with the V-score. But how about the V-score arrows now adding that next level of clarity? Way harder to miss, isn't it? Far harder to miss the trade. Okay, last trade. This is that trade when I told you, hey, let's make sure we avoid the second half of the day. All right, V-score arrow, V-score arrow. Okay, next entry. Oh, did it again. Thank you very much. And V-score arrow. And then what do? We shut it down, right? We shut it down. And that was it, right? We did not have clarity on the VWAP. That's fine, but there's your V-score signals. Okay, first 2 hours a day, sticking with that formula of the first 2 hours a day. Okay, so now how do we start putting it together? We've talked about the hours that we trade, picking a side, how to pick a side, and then how these V-score arrows make the signals that much clearer, right? With the volume derived look at the market, not a price only, but volume. And now we're going to start lining these up. So we've talked about volume tools. Now we're going to talk about a price-based tool, and that is the Darvis. So many of you might know who Nicholas Darvis is, and in his Darvis boxes. We don't use the Darvis box, but we use a lot of the Darvis methodology. We've modernized it. We've taken certain elements of it that are ideal for trading. You know, look, Darvis traded in the 50s and the 60s, right? Fast forward to 2020, we've taken what still applies now to the 2020s, right? The 2020s, not the 1950s. And we've just modernized a classic, amazing approach to the market. And this is a price-based support and resistance. And just like with the V-score signals, just follow the arrows. All right, let's dive into the chart. So the NASDAQ here, take a peek. Here are my V-score, kind of aggressive, saying, hey, look, whatever you do, please don't short. We're down at the bottom of the range. Darvis, Darvis. What we want to do is get these arrows in close proximity to telling us, here's your V-score heads up. There's your Darvis timing. Here's your V-score heads up. Again, V-score, Darvis timing. You're getting these arrows to as closely as you can stack up. This is a chart of the NASDAQ. We bought at 870 right in here. And then we had our first exit at 12,930. So move up. Here's your 12,930 exit. Again, relying on that V-score. All right, another example. Looking at the S&P, just line up the arrows, right? Look at the chart. Here. In at 39.06 and a quarter, out at 39.20. 39.06 and a quarter, right in here, out at 39.20. So I actually got out a little bit earlier. These are pretty conservative trades. I am not swinging for the fences. I believe that's another mistake a lot of traders make. But you know a lot of things about the VWAP now. Are we in the bullish hemisphere? We sure are, right? And so if you think there could be higher highs, well, we're in the right situation to do it. So we're stacking all these tools together, the V-score signals, the Darvis with the arrows, and then that anchored VWAP to let us know that there's a likelihood that, yeah, maybe we could continue to grind higher and get more out of the trade. All right. And you'll notice, by the way, does this work on a 5-minute? Yes. Does this work on a 2-minute? Yes. Does this work on a 1 minute? Yes. Does this work on 15-minute charts? The time frame is almost irrelevant. And here, I'm really going to blow your mind. These same tools work on the daily time frame too. This isn't just an intraday tool, gang. The same tools work on the daily. All right. So what is a piece that we haven't talked about yet? All right. So we talked about how important volume is. Clearly, it's huge. Volume is a key piece, probably the piece that most traders don't pay attention to. But let's talk about how to use volatility. Now, this word is one we use a lot, but let's talk about what it means. What is volatility? It's the historic likelihood of price movement. So then now what is its role? How can it help us? Well, its role is to allow us to understand where the market could go in either direction. It's a range tool. It's a possible range tool. So then finally, what is the PMR? It's another Ragheeism, and it just stands for the price movement range. Again, historical volatility. When I say historical, we're talking about looking at a 6-month look back, not 21 sessions or 14 candles, 6 months of data. So it's a historical, very different approach to volatility. So how do we know what these volatility ranges are? I'm just going to show you this real quick. This is another aspect of trading that a lot of day traders just aren't aware that they have access to this information. Every hour of the day, you might have remembered earlier, I said they're not created equal. Here is the proof, right? Every hour of the day actually brings you a very different amount of price movement, right? And this is the proof of that. So when you look at the 9 o'clock hour versus 10 o'clock versus say 3 p.m., they have different behaviors. You can see how in the middle of the day, volatility drops only to rise into the close. We're taking advantage of the two more actively or more volatile hours of the day in the morning. All right. Okay. So how do we chart this on our screen? Okay, Rag, yeah, that's a neat graph, but how the heck do I translate that to the price chart? You're looking at it right here. It's something that I created called the HPMR, and you can see these right here. So these are the volatility ranges right on the screen, support and resistance. These are those, so every hour of the day, we know that there's a certain amount of price movement that 68% of the time we move. We use those probabilities to say, hey, are we really volatile? Are we kind of sedate in terms of the price action? Is the market moving normally? Is it moving abnormally? Think of all the implications of knowing how much the market is typically capable of moving and then being able to trade with that information. In this case, I was able to buy the S&P at 4167 and exit using these volatility ranges at 41.95. So again, how much could the market potentially move? And have we sunk down into the bottom of that range, or have we rallied up into the top of that range? This is volatility graphed on the chart. Here's another example. This is the Dow. Nice trade from 32,515 to 32,598. Again, $5 per point. This is a $1,245 trade. And again, and what we want to focus on is how much is the market capable of moving? I liked this example because this doesn't happen a lot, but notice how the price movement range just acted like stairs. So what worked for me here? Are we above the VWAP? Yep. And then look at how the HPMR is just walking up the stairs. How gorgeous is that in terms of clarity? If you're wondering, gosh, is this market really moving higher? Look at this market just climb the stairs. And there are those days where we just continue higher and the market's climbing the stairs. Most people don't know the stairs because they don't have that historical volatility. Now let's layer it again, right? Now let's say, okay, we've got volatility and we got the price-based automated Darvis signals. All right, let's do it again. Take a peek. Darvis, right? Darvis right there, Darvis right there. Look at how it's syncing up really nicely, especially on the buys. Darvis support, hourly price movement range, volatility-based support. Remember, the reason at this point you are looking at a chart that's breaking down price in a way that most traders, gang, don't even know is happening. It's submarket sonar. Imagine a glacier and all we see is the tip, and then there's all that mass underneath. That's what we're able to take advantage of. Volume is that key. Another example with stepping the stairs. Again, that same chart now with the Darvis. Okay. All right. So at this point, you might say, okay, Rog, this looks really cool. And those Darvis signals look like some kind of magic trick. And I love the volatility and the volume, but maybe I don't, maybe you don't trade futures. Truly, no problem. No problem. I don't just trade futures either. So you don't have to. Everything we're talking about applies to stocks, the options on stocks, and ETFs, and the options on ETFs. So if you'd rather trade options, which I like to do in certain situations, the analysis is exactly the same. You want to buy calls and puts instead of get long the S&P futures? No problem. No problem. The analysis is the same. The execution of how and where you want to make the trade is the only difference. All right. So let's take a look at the NASDAQ here. Same tools that we've been talking about all evening long. This is the NASDAQ. All right. So we have our Darvis, right? We have our V-score, etc. We'd love to see after we buy the market get above the VWAP, all those things, right? Here's the QQQ. Same idea, right? Can we get some Darvis? Can we get above the VWAP? Is the V-score down near the lows? Quite frankly, if you have a clear read, and this is something that will really help you, those of you out there that want to trade the QQQ, SPY, could be the SPX as well. If you want to trade the ETF, follow the index futures. You don't have to trade the futures contract. So here's the S&P. You don't have to trade this, although, this is a $3,100 winner for me. But you might say, Rog, I don't trade S&P. What is my alternative? I don't want to trade the ES futures, although this signal looks great. How do I buy an HPMR, Darvis, and V-score trio? My gosh, look at everything that's stacking up here. How do I get a piece of that? No problem. SPY. One of the great things about trading the ETFs of the futures is that they are very, very inexpensive. Now is the best time ever to have the ETF alternative because the options expire Monday, Wednesday, Friday. So a lot of times when I'm stepping into an SPY options trade in lieu of the S&P, or for those of you that want to trade the SPY, oftentimes these options are going to be $1 and change or even less. They're very, very inexpensive. So $1 meaning $100 per option. Because we have the closer expirations now, you'll see there's a lot more affordability in those options. Okay. So again, remember, you don't, and let me also mention this. Let's say you like a stock that's heavily weighted within the S&P, or let's say you like a sector that's heavily weighted within the S&P. So maybe you're looking at financials, or maybe you're looking at JP Morgan. You can trade those names the exact same way. I'm showing you the broader picture, but you can continue to get more granular and find more opportunities, all with the automated tools. So as luck would have it, this is something that just happened today. All right. So as luck would have it, today we saw the FOMC volatility. How many of you are watching the market this afternoon going, oh my gosh? Well, I keyed up my tools, the very same tools that I'm showing you guys today. And here is how everything that we've talked about tonight came together with one of the more bonker responses to FOMC statement and press conference that I've seen in a while. Some of you might have seen this. All right, take a look. This is the NASDAQ on the 5-minute chart. I have the S&P as well. So right here is your 2 p.m. Eastern sell-off. I think a lot of us saw that. Well, one of the things I love to take advantage of is exhaustion. When everyone else is panicking, where is that exhaustive support? Well, I'm not going to enter with 2 p.m. We need to see this market calm down a bit, right? So what do I want to do? I'm going to stack my tools as best I can. We blew the HPMRs out of the water. That's expected. But what about the Darvis and what about the V-score? There's your conservative V-score right there. There's your Darvis signal right there. So again, I'm not going to take the trade at 2 p.m. I'd actually like to take it a little bit after 2:30 when the press conference begins. And there it was. Volume and Darvis. All right, this didn't happen once. Here's the S&P this afternoon as well. Same idea. Here's where all the melee comes in. Look, don't be too quick to jump in. All right, don't be too quick to jump in. Although I will say, there's your Darvis. No V-score though, right? V-score came a little bit later. Okay, so V-score said it's a buy. V-score said it's a buy again. Well, as luck would have it, we had a nice second chance entry. That's what's so great about the Darvis and the V-score continuing to alert as the environment is still valid. And there it was. And this is the S&P. This is a 41.92 buy. And what did I do? I just wrote it up to, well, basically the HPMR. So that was it was almost 30 points this afternoon on that. This was actually a double bottom V-score hit with the double Darvis. So really nice of the market to give us a second chance. And that happened just today. Now, normally do I trade the afternoon session? No. You know, the reason I really wanted to try it out, and as I was looking at this, I said, do I really want to trade the afternoon? I really wanted to run the process and my tools through some of the harshest conditions, if you will. I wanted to road test this off-road. Could it handle major volatility? So imagine if you get major volatility between 9:30 and 11:30. Can the tools handle it? You bet. If they could handle today's FOMC and give you this kind of clarity, they can give you clarity in darn near any kind of environment. So if you want to run a process that you like through basically the harshest conditions possible, run it through a non-farm payroll, run it through a FOMC event and see how it fares. So if you're wondering, hey, can this market handle 9:30 to 11:30 and handle today's 2 to 2:30 p.m. FOMC event? So yeah, it can absolutely handle it. Okay. So what have we talked about tonight? Let's summarize some of the points. A lot of these you can put to work right away, right? 2020 is behind us, and these are new market conditions. The first 2 hours after the bell are the best hours to day trade. What else do we want to do? We want to avoid, I can't emphasize this enough. You want to avoid habitually, right? You want to avoid entries after 11:30 a.m. Eastern. A lot of traders continue to persist in trading through the midday doldrums and into the afternoon session and give back the easier profits that can be made during the morning session. After the first 30 minutes of the day, the clearing range will give you a great idea of where to start. This is huge right here. Learn to pick a side. Tomorrow morning when you're trading, are you only a buyer or are you only a seller, right? We've already done that. We've looked at the daily. We've already set up. Do I want to be a buyer or do I only want to be a seller? That daily is what creates that clarity. Tomorrow morning, I know I can be a one-sided trader. I'm not going to get whipsawed into back and forth, long, short, long, short. All of these principles, remember I said the very first word to write down, scalability. This is a process that will grow with you as you grow as a trader. You might be at 5,000, 25,000, 15,000. This will scale with you. Not only will it scale with you in your futures trading, it'll scale with you in your stock trading. It'll scale with you in your option trading, right? Scalability across multiple assets. What else have we talked about? My time-tested tools have never, this is something I'm really excited about. They've never been easier to use because we have the signals now. You guys saw those arrows. If you were always wondering, is that a Darvis? Is that a good Darvis? Is that a good V-score low? Do I have the lineup? Now, just you follow the arrows. I'm following the arrows. My eyesight is not getting any better. It makes it a whole lot easier to see the trades, and it's a whole lot harder to miss them. Volatility, what is it? Where to find it? How to use it in your trading plan? What do we know about volatility? Price movement, hour to hour, has different characteristics. As we mentioned earlier, not all hours of the trading day are created equal. Treat them as the individual segments of psychology that they are. All right, we've also talked about how to use volatility to establish expectations. You notice that I used those zones to buy with my directional bias and take profit. Opportunities and how to trade alternatives and options. So again, if you're not an S&P trader, no problem. Trade the SPY, trade the SPX. If you're not a NASDAQ futures trader, the NASDAQ gets fun. What about QQQ? What about XLK? What about XLC, SMH, XLY? Do you see that there's a lot of ETF alternatives where if you understand what the NASDAQ is doing or the S&P is doing, S&P can lead you to XLF, the financials. It can lead you to healthcare. So it just sort of opens the door to more and more alternatives. using the same tools, using the same process, volatility, those volume tools, right? And then the Darvis. And here's the important part. Less is more, gang. I think some traders think there's a correlation to more trading activity equaling profit. I will tell you it's just the opposite. Trade less and you will set yourself up to potentially make more. So focus on the best 2 hours of the trading day. And that is the first 2. All right, we'll definitely cover some questions here. So a lot of you know, I've been mentioning this for a while in my morning show, Charts and Coffee, that we have a class coming up on the 26th. And I'll tell you, with the new tools that we have, I am so excited because this is the easiest iteration. It's the easiest explanation of how and when to be a buyer or seller, take profit that it's ever been. So on the 26th, we have a class coming up. We're going to have live trading days in June and July. We'll get into all the details. We'll also have, of course, an indicator installation session for the new, for the update, this updated version of the V-score and the new Darvis arrows signal. All right, that one's new. So what are you going to get and how do you get these tools? So first of all, the strategy class is going to be on the 26th. All right. Now you are going to get, so some of you were asking me earlier, Raghee, how do I anchor and where do you anchor the VWAPs? That is included in the class, even the basic. All right. You're going to have the new Darvis 3.0 signals. This is the only place they're available. It's only going to be available with this class. Okay. This Darvis 3.0 signals version. Very excited about that. Then, of course, you've got the 2-day option for Pro Live and the 2-day option for live trading. All the different levels are going to include the updated tools. And actually, there's a couple bonuses too. There's a couple bonus tools that we're going to include too. One is a volume flag tool that I've got. So there's some neat perks. I got some neat bonuses for you. All right. The basic package, again, on Friday, Duncan's going to walk you through the installation of all these new tools and flags. All my day trading tools, he'll walk you through the installation of the current hourly price movement range. And the strategy class is 1 to 5 Eastern on Saturday, the 26th. Okay. All right. So the bonus of the VWAP Max package. Oh, hang on 1 second, gang. It's Thursday, the 24th is the indicator installation session, but we'll get all this information to you. So the indicator installation is Thursday. Oh, actually, I like that better because you guys will have a whole day to play around with it before the class on Saturday. But anyways, what does the VWAP include? Those anchored volume weighted average price tools, the VWAP. We're going to have the V profile, that V score with the signals. That is now going to be part of the upgraded package. The V score signals version is in there, as well as the V score bands. Okay. So the entire VWAP and the upgraded V score. And if you already have the indicators, no problem. Give the office a call. They'll take care of you if you already have those indicators. The pro package. All right. 2 days of live trading. So the idea here is, once we take the class on Saturday, you guys know the deal. We get right into the live markets to show you how this works in a live environment. So we're going to be trading on the 30th and on the 7th in those prime time mornings. All right, 9:20 to 11:30 a.m. So we're going to get to work during those times. And I will be sending out alerts. All right, I will be sending out alerts. So we'll cover the morning with the tools, trade together with alerts. All right. So we'll do that for 2 days for the pro package. And of course, the alerts come with the elite package as well. So now it's 4 days, right? 4 days of live trading, putting the tools to work. And again, there's nothing like being able to, sit with brand new tools and for me to be able to coach you through using them in a live environment. And, of course, we're going to be putting on trades. The idea, of course, is always for you to be able to recoup your investment in the class. Of course, we can't guarantee anything, but if I look at the way the last couple of months have been, apart from FOMC madness, and even the afternoon wasn't bad, It's been a really good 2021. So I anticipate more of that. Of course, the class, the live trading, the indicator installation session, all of that is recorded. So you can watch that to your heart's content and review any parts of the class that you need to. And of course, the live trading as well. We accept PayPal credit, so check that out. Makes it that much easier. Now, this is something new. All right, this is something new. One of the things that a lot of folks have asked, and big thanks to Trish, she's my right hand here in the office. If you want just live trading, give the office a call. Now, let me mention, if you've got the VWAP tool already, the VWAP Max, that's great. And you will get the upgraded signals with the V-score, but this does not include the Darvis. Let me make that really clear. If you want the live trading and you already have the volume weighted average price max tools, that 4-tool set, yes, you will get the updated V-score with signals, but this does not include the Darvis. The Darvis only comes with the class, the basic, the pro, or the elite. Okay. All right. But if you just want live trading, that's cool. And I'm glad that for some of you have been asking, Rog, I just want to join you for a refresher. No problem. We got you covered. Just call the office. All right. Okay. So again, choose the package that you want, but please be aware this update right here, the Darvis 3.0 signals, is only available with this class. All right. And actually, there's a couple other, for those of you who have taken this class, there's a couple other bonuses that we're throwing in there with you all. So we're going to throw the current HPMR in there. Now, these are updated regularly, but I'm going to throw the current HPMRs in there for you all, as well as the volume flags. If you haven't seen me use those volume flags yet, that get you aware of what the average volume is and whether or not we're above it, you'll love that. So we have a couple bonuses for you for those of you that are taking the class, okay? Beyond what's here, all right? Okay, next is, well, the class. That's the next step, gang. So this is day trading the futures markets, yes, but what door does that kick open? ETFs, individual stocks, right? You can buy the individual stocks, you can play the options on the stocks and the options on the ETF. So understanding where the indices are going in those first 2 hours of the day open up a broad view of possibilities. And with these tools, here's what's really cool about having the automation. A lot of traders have told me, Rog, it's really difficult to track so many different markets simultaneously. But with the automation of the tools, it's a whole lot easier because the V-score tools have an audible alert and let you know, hey, this particular chart is actually down at a V-score high or low. So, it's a lot easier to catch those trades. So let me jump into some questions. Thank you so much for all the questions. Thank you for being here. I really, really appreciate it. I hope that this is opening the door to different possibilities for your day trading. And remember, one of the side effects of being a better day trader is being better at order entry on any of your trading. I'm going to show you how to be a more efficient options day trader because that's part of the process. How we position size, how we gauge risk, all that is going to be discussed. Now, the other thing that I want you all to keep in mind is how much the daily time frame is part of what we do. So not only does this process that I'm walking you through give you more and better opportunities intraday, it's actually going to get you better at understanding directional bias on the daily time frame, right? Okay, so let's cover some questions here. I'm going to get back up to the top of the Q&A. Just bear with me as I scroll up. A lot of questions. Thank you so much for that. So as far as the minimum account size to trade futures, Hilario, I would say you probably don't want to be smaller than, say, 5,000. You can trade smaller, of course, because, well, let me also mention this. Let's say you want to put up a 1,000 just to give this stuff a try. You could trade the micros. You can absolutely trade the micros. That's for futures, right? And then let's say, 1,500 is probably a good number for that. Say 1,500. Now, if you want to trade the options, Remember, as I mentioned before, a lot of times when I'm trading ETF options, they're usually well under $2. And sometimes if we have the Monday, Wednesday, Friday expiration for the S&P and the NASDAQ, I can be even at or under $1. So we're talking about $100 to $200 per option. So again, you can start very small and scale. It's definitely very small account friendly, 100%. So thank you for the question on that. So the next thing is, if you want to follow the trades, you'll want to go with the Pro or the Elite, where you can get the 2 to 4 day live trading. And then the next question is, do these tools work with Thinkorswim? I will say this, most of our tools are geared, for me lately, I am focusing on Thinkorswim and TradingView. All right. We have most of our simpler, community is on Thinkorswim. And again, if you don't have a Thinkorswim account, what I recommend, because the tools work really well on Thinkorswim, is you can open an account. You don't have to fund it with a lot of money, just so you have the charts. The charts are quite good, and they're what, again, most of the community uses. Probably most of you listening in have Thinkorswim. So yes, they work with TOS. They work with Thinkorswim. And we do have some of the tools working for TradingView. We do have some of the tools working for TradeStation, but supporting multiple platforms is really pretty difficult. And most of this is TOS. Yes, Thinkorswim. All right. Next question is, I'm very interested in day trading. Michael, where to start? You're looking at it. This is going to give you a look at how to trade futures, stock options, and as well as the.
Sorry, I got an echo.
No, I just turned on the volume. There we go. No. Give me 1 second. Did you turn your? Oh, you hit this. There we go. Technical snafu. All right, I'm back. Are you trying to get in? Are you trying to get in on the webinar action here? That's right. Yeah, Trish just wants to say hi. That was Trish saying hi. All right. So, let's see. What else do we have as far as questions? So yeah, this is really going to be the total package as far as futures, stock, and options day trading, all across the board. All right. What about what tool do I use to track performance? Oh, okay. So yeah, the tool that you see me use is I've used TradeMetry in the past. I think that one's really good. The one that you saw me use today is one called TraderSync. And all they do is you download your trades into an Excel file. So most of these platforms will let you extract your trades, and you just upload your trades into these platforms. It's really, really easy. And that's how I'm able to track my trades. We'll talk a lot more about trade tracking, risk reward on that seems, risk reward ratios, losing trades, all those things in the class. Yeah, for sure. Okay, next up is how many days to expiration intraday? Harry, it depends on whether or not we have Monday, Wednesday, Friday expiry or just Friday. So it's usually going to be whichever one we can see liquidity in, open interest and volume. But if we have the Monday, Wednesday, Friday option, I try to take advantage of that because it brings the cost way down. If not, I'll just go with the Friday. For day trading ETFs, what is the strike and time to expiration? So the strike, Mike, I'll oftentimes look at the money, and it's the same answer for the expiration as Hari. So it's not the strike and the expiry that's sort of the secret sauce. It's when are we buying it? And one of the things that we do take a lot of advantage of is momentum, using the momentum in the right way. If there's a secret to options trading, it's harnessing volatility. As you notice, because we have specific volatility tools, it's harnessing volatility. Just to confirm, the alerts would be on a daily or weekly basis. So when we have the alerts for the day trading, it's going to be on the live trading day on the intraday charts. Now, alerting intraday trades can be difficult. We will do our best to get the intraday trades out in a timely, actionable manner. This is not like we're swing trading a daily time frame, but whatever trade setups that form while we're together, I'll send them out. So if there are some interesting end of day setups that we see as we're setting up our directional bias in the daily, I'll send them out. Yeah, it's not just, if we have some interesting setups during those days, I will be happy to send them out. Which is more suitable for beginners? Well, if you want to be an intraday trader, this is very much suitable for beginners. And the reason I can say that with such confidence now more than ever is because we've automated the tools and the signals to such a degree that you're really following in many ways, a lot of the processes that I'll share, but the signals are automated now. So I'd say that this is probably the most beginner-friendly approach that I have, because not only have we automated the tools, now we've added signals to the tools. And so this is about as user-friendly that it gets. All right. What else? What's the difference between the Darvis? So we have a free Darvis. So this Darvis has the signals. It has the signals. So we added logic to the traditional Darvis box and the updated. And this is not a Darvis box. It's looking at certain patterns and exhaustion levels within not just Darvis levels that have formed, but even potential Darvis. So sometimes this will front run the level itself. The signal sometimes can front run the level itself. All right. Let's see, what else do we have here? So Thinkorswim covered that. Yes, it's an anchored VWAP. I'll teach you how and when we anchor the daily and the intraday on those volume tools. This is not available for Ninja. Sorry. Yeah. For those of you asking for other platforms, no, I don't have anything for NT8. I don't. What else do we have here? Talked about minimal size. Do the arrows print? So once the candle is completed, like the question about whether the indicators will fluctuate, right? So while the candle is forming, right? While the candle is forming, if the price level retreats, yeah, it might come and go. Yes, it could. But remember, we're looking at 1, 2, or 5 minute candles. And then we're also trying to confirm them with existing Darvis levels or even the V-score. But yes, it doesn't happen very often. But if a market makes a severe move and then retreats from it, and I'll check with Lorna. Lorna, do they reprint? I haven't seen a lot of reprinting. Lorna's here in the room, and she's been a huge part of retooling these. They can, but they really don't very often at all. They really don't very often at all, but they can. So I'm not going to tell you they won't, but they don't habitually. And that's part of what we did not want to happen, because that is super frustrating. Yes, I agree. Do I ever trade at the end of day or hold overnight? Tom Burns, yes. I mean, there's very few times that I might have a market that's been on the, the bullish hemisphere, if you will, of the VWAP, just continued to grind higher. But I don't habitually, because one of the great things about being an intraday trader is just having a clean slate every morning. And if I want to take something overnight, it's usually going to be set up on a longer term time frame with a much higher volatility tolerance. Occasionally I've done it. I'll let you guys know when it makes sense, but it's quite rare for me. I love the idea. And let me remind you guys all of this too. Unless it's an ETF that still has some time to expiration, remember that when you take day trading margin in futures and you take it past the 4:15 Eastern, you will have to have the full margin requirement. And it is a big number. So you might go from, say, a $500 initial margin requirement to, say, so for the Dow, for example, it's $10,000 per contract. So most traders are not going to want to do that. And if you do, I'll show you how to do it with options. That's usually what I tell traders to do. Do it with the options on the ETF or the options on the futures class. Okay. For those of you that are asking about what is the difference between this and my mastery. Gang, my mastery is an overnight swing trading approach, slower, not day trading, although we do day trade in there sometimes. But for the most part, this is an intraday approach, and my mastery is a longer term swing trading approach. This approach, what I'm teaching you here, will be applicable to some of the strategies that we use in the mastery, but you don't need it. But those of you that are in the mastery, yeah, you're going to find that this is going to definitely add to the way in which you understand daily time frame implications on the intraday, and then vice versa. The intraday knowledge is going to make you great at order entry, and you're going to have a much better understanding of how to chart the daily. Again, daily time frames are so important to day traders. I cannot emphasize that enough. And that will be a big part of the class. That's the 6 things that I look for on the daily time frame. Okay, so let's see here. Now, the ultimate day trading class was really from the ground up with talking about futures trading. This class is going to be futures, options, stocks, and ETFs. How to trade all of it. How to take that index analysis and then continue to break it down and also day trade options. And then, of course, this class comes with the updated Darvis. And now we have the updated V-score for probably the easiest trade recognition that I've ever been able to show you all, which I'm so excited for y'all to play with these tools and see how amazingly well they work. Will we be trading options in the live sessions? Absolutely. Options and futures, yes, in the live session. And I'll give you guys the alternatives. Some of you that want to trade the micros, great, go with the micros. If you want to trade the minis, fantastic. If you want to trade the ETF options, we'll be walking through the whole process. That is really the big change from what we did last year to, well, Rog, how do we day trade options? How do we day trade the relative outperforming sectors, right? And then how do we use these new updates to do that in a more efficient and effective way? 100%. Okay, so do the arrows appear at the same time as the bar? Yes. It's not after, right? It's not after. And remember, as far as the tools that you have right now, the thing that is unique about the tools that I use is they are volume derived. Most tools are price-based tools, which is fine. Darvis is a price-based tool. But the difference maker is diving below price and understanding the size behind it and understanding the sentiment behind it. So volume really is a big difference. That's the big difference maker, okay? All right, next is, do you need to use Fibonacci? No, I don't. They're fantastic. You can use it as another layer, but no, you don't have to. All right. Okay, so thank you so much for all the questions. I think we covered them. And of course, you guys can review this in the replay. So thank you so much, everybody, for your time. I'm looking forward to seeing you on the 26th, which is next Saturday. As soon as you sign up for the class, I do believe the tools are available in the resource section, and the bonus tools, which we're going to add the updated HPMR. That's going to be good, at least for the next, I'd say next month or so, because the HPMRs do need to be updated, but I'm going to put the HPMR in there as well as the volume flags. Okay. So I'm looking forward to seeing you for the class on Saturday. They run about 4.5 hours, usually, with Q&A, maybe 4.5 plus, but not much more. So again, thank you so much. Put some of these tips to work, pick a side, first 2 hours a day. And I think you're going to see an immediate improvement in your day trading. Thank you so much, gang. Be good to each other. I'll see you next Saturday.